and welcome to Vox Markets. I am John Human and I'm delighted to be joined once again by Matt Timmins, co-CEO of Fintel. How are you doing, Matt?
Hi, John. Very well, thank you. Great to be here.
Excellent.
Thank you very much.
Excellent. No, and we're here today to talk about your recent results. I think we were a couple of weeks ago now, and very good they were too. And it's been a year of huge strategic transformation at Fintel. Perhaps talk me through some of the key highlights.
Yeah, absolutely. It's been an incredible year for us, 2023. I think I've been here since the business started in 2002, and I can't remember a busier year than the last one. So yeah, it's been non-stop, but really good. So we've completed 4 acquisitions during the period, and also made an investment into a brilliant new CRM system called Planner. And then since then, we have made 3 other acquisitions and also 1 additional investment into a business called Mortgage Brain. So it's been an incredibly busy year, lots of moving parts. We're trying to complete essentially a connected platform for the intermediary market, giving advisors everything they need to do their job. And so a big part of that has been internal development, which we'll come on and talk about later. And then another part of that has been acquiring the talent and the systems and the capabilities through acquisition. So yeah, incredibly busy year for us. On top of the acquisitive growth, we've also managed to deliver a good set of financial numbers as well. So we've grown our EBITDA in the core business by 9%. We've delivered that at a 36% EBITDA margin, and also grew the dividend by 6%. So I think that combination of delivering what we said we would do in the market financially, and also putting our capital to work and acquiring some great businesses, has resulted in a really good period for us.
Yeah, very, very strong numbers, and that's been in a year which hasn't necessarily been the easiest year, in investment markets. Can you perhaps give us a feel for sort of some of the challenges, the headwinds that the market's thrown at you, and through which you've delivered?
Yeah, absolutely. I mean, it's been a tough one across the entire markets. Perhaps the most notable part of that really has been in the mortgage market. So the mortgage market represents about 20% of our business, and the number of completions, housing completions which require a mortgage in that market have fallen significantly. So I think we're probably had a headwind of around about £1 million EBITDA on that side of the business. So we've had to compensate for that. But the whole point of Fintel is this defensive growth stock. So we've got plenty of other irons in different fires, notably the fintech side of the business, which has grown incredibly well over the period. So that's sort of made up for the fall in the mortgage market. Yeah. We've also had consolidation in the IFA sector, which has been both a sort of blessing and a curse for us in a couple of ways. So one is, as intermediary firms do get consolidated, we lose some of our paying customers. On the other side of the fence, we provide services to those big consolidator groups. So we retain the revenue, but just from a different side of the fence, I guess. So that side of the market has been very buoyant in 2023. I think that will cool down a bit in 24. Now the cost of debt has increased relatively significantly over the period, but we still provide services to many of the the strong consolidation groups in the market, both fintech solutions and regulatory solutions. And then we've also seen some consolidation in the investment management side of the market as well, and I think that potentially will continue into 24 and beyond. So yeah, a very, very active market in a number of ways, with both headwinds and tailwinds. And I think the benefit of our group has shone through over this period of time, because we are involved across investments, pensions, GI, and mortgages. We're able to take some of those headwinds and cushion the blow through some of the tailwinds that we see. I mean, regulation never stands still. There's always new regulation coming in. Consumer duty came in last year, and that was a good tailwind for us as well.
Yeah, lots going on. On the acquisition front, in particular, I mean, lots going on at Fintel. It's been almost difficult to keep up. There's been so much going on. I don't know how you've managed to achieve such a strong, acquisition slate over the course of the year. Perhaps you could talk us through some of the deals in more detail, what you've done, how they fit into the strategy, and where you expect them to take you financially.
Yeah, absolutely. I mean, with the acquisitions, many of these we've been tracking for a significant period of time. I think all of the businesses that we've acquired or invested into, we've worked with in some way, shape, or form, or our membership has utilized, sort of relatively significantly over the course of the last couple of years. So, as I said at the start, what we're aiming to do is to build a connected platform for intermediaries to use. The average intermediary firm from our research uses 9 pieces of individual software just to get the job done for their clients. And very often those point systems are great at doing something really specific, but they don't allow the seamless integration of data between them. So you having to log in and out of each system and rekey data. It's not a very efficient process. So a key part of the aim of Fintel is to provide everything an intermediary needs on one connected platform. So part of the acquisition strategy is very much to do that. We acquired last year. Well, let's talk about the investment first of all. So we invested into a business called Planner, which is a new CRM system. So this is record keeping for intermediaries, and Planner is a sort of API first piece of kit. So what that enables us to do is to use the aspect of Planner, which is an API integration, into the other components that we've acquired. So not only does it give us back office functionality for the membership to use and other intermediaries, but it also provides that API layer into all the other components that we've got. So that was a great investment, and the team there at Planner launched the business around about 2 or 3 weeks ago into the market, and so far are building up a really healthy pipeline. So we're delighted with that investment. Other businesses we've acquired, we acquired a business called AKG, which provides financial strength ratings. And AKG is the most commonly used filter in the de facto engage module. So de facto engage is used by 8,000 intermediaries, and when they're looking for the relevant solution for their clients, they turn to the AKG filter first of all to make sure the company that they're trusting their clients' money in has the relevant financial strength. So that was a great acquisition for us. MyCap, another great business, provides research and ratings on alternative investment products. So this is EIS, VCTs, and business relief. So again, increasingly more used by intermediaries when they're advising clients, particularly their wealthier clients. So we felt that we needed to have an investment into that part of the market, and MyCap is by far and away the market leader. So we're delighted to add them into the team. We also acquired a business called Competent Advisor, and that provides intermediaries with a learning and development platform, so they can demonstrate to the regulator that they are doing the required number of CPD hours, and they can also set tests for advisors within their practice to undertake. Again, is a clear market leader, and we've had a relationship with Gillian and the team there for a long period of time, so we're delighted to bring them on board. Vouch for, I guess, needs relatively little introduction. It's a fast-growing business that helps intermediaries understand their feedback from their clients through their consumer duty tool. It's also a business where clients can go and search and look for an intermediary to support their needs. And Vouch for, I think, is a fast-growing business and quickly becoming the market leader in what it does. Synaptic brings with it a solution for intermediaries when they want to give advice on things like critical illness and income protection, so on protection policies. And they can trade through the webline, they can compare and trade through the webline system there. And then finally, Owen James provides really high-level events for the intermediary market and also for product manufacturers. So in with those sort of basket of acquisitions here, we've got research and ratings, we've got advisor, knowledge center and testing center, we've got trading capabilities, and we've got events as well. So a whole basket of acquisitions, all designed to help intermediaries to do a better job for their clients, and all surviving in one connected platform that's been built by Fintel.
Yeah, absolutely. So making life easier for IFAs, improving outcomes for their customers. But from your point of view, I guess it creates a lot of cross-selling opportunities as well as you bring these new acquisitions into the group.
It does, yeah. I mean, each one of these individual businesses has competitors in their field. So we're acutely aware, intermediaries have got a choice, which business to use. And I believe that once we have completed the task of connecting these businesses up and products up into a way that makes sense for the intermediary, they will hopefully see the benefit of that. And what we will see is increased data flow across the whole platform, thus making it more efficient for intermediaries and giving us a richer data set for which to understand exactly what products are being advised on and why they're being advised on, and those products that are being sold out of, the reasons why they're being sold out of. So it helps complete the picture for us from a data perspective, very much so.
Yeah, it sounds incredibly powerful. We've talked about acquisitions. Let's talk about investments, because another of the big highlights this year was essentially the launch of Fintel Labs and your first investment through that. Tell us how that differs slightly from acquisitions and what's the thinking behind it.
Yeah, absolutely. So I guess with acquisitions, what we're looking for is a business that has a good track record, has a strong management team, has customers in place already, and has revenues and profit built up over the years. That doesn't necessarily lend itself for some of the new players that are coming through into the sector that have often got wonderful pieces of technology, but no real customer base at this stage. So we needed a different vehicle and a different approach to look at those kind of companies. So we launched Fintel Labs, and the aim of Labs is to invest money into early stage businesses that we think have got the required technology and business plan to be incredibly successful, but are yet to be, I guess, proven from a P&L perspective. So Fintel Labs is about investing a relatively modest amount of cash into a small number of businesses, which we believe have got a really bright and long-term future. These are businesses built on new technology. They're businesses that very often are challenging the big market incumbents and need some financial support, and also need support in terms of distribution. And what we bring as Fintel is that financial support, but also a massive customer base to help them get scale quickly. So we invested some money into a business called Planner. As I said, we took a 25% stake in that business with an option to add to that stake in the future. And since then, we've helped Planner to develop the back office technology. And we've also helped Planner with its market launch. So putting our investment and our sort of brains behind the all of the sort of marketing and launch activity of that business. And we continue to help it with its distribution strategy. So that's a great investment for us. In addition to that, an investment that we announced, I guess about a few days ago now, was an investment into a business called Mortgage Brain. That's slightly different. That is by far and away the market leader in the world of mortgages. And we invested into that business primarily for two reasons. So one is, on top of the investment, we've done a huge distribution deal with them. So this enables Fintel to roll out Mortgage Brain capabilities to all of its membership and to help those mortgage intermediaries to do a great job for their clients. So it gives us this big sort of distribution opportunity. And Mortgage Brain is by far and away the leader when it comes to integrated CRM technology and mortgage sourcing. We think it's a brilliant business. We've known it for a long time, and we think that together we can do some great things in the market. Mortgage Brain is taking our investment and investing it directly into the products within its capability. So that money is going straight into product development, which is great. So I think this is one where genuinely everyone wins. So the intermediaries will win because they will get access to technology they didn't have before. We will win because we will be able to provide more and more intermediaries with the solutions they need, and Mortgage Brain get the investment they need into their business. So I think this works incredibly well for all parties involved.
Yeah. I mean, it feels very much like a virtuous circle. The more the platform comes together, the more you become the go-to partner for these sort of fast-growing companies.
Absolutely, and I think that in terms of the IFAs, wealth managers, and the investment side of the market, we have pretty much completed everything we need now to get a one-stop shop solution for those firms to use. It's now a case of making sure that we manage the integrations carefully and the two-way flow of data very carefully. And we are already out there in the market looking for enterprise deals for the whole solution. For the mortgage side of the market, we were acutely aware that whilst we have all the regulatory capabilities and the third largest mortgage club in the market, we were lacking when it comes to mortgage technology, CRM and sourcing primarily. So the deal with Mortgage Brain plugs that gap for us perfectly and allows us to provide the same connected platform out to the mortgage intermediaries. And then the other thing that we're doing on the general insurance side of the market is we've invested, you'll see from the accounts, we've invested 4.8 million into our own business this year in terms of DevEx and CapEx. And over half of that has gone into a new product called Matrix 360, which we are rolling out to the general insurance market, which will cover off the vast majority of the needs of product manufacturers in that market. So I think, we are completing that jigsaw across our three core markets of investment advice, mortgages, and general insurance. And the acquisitions and investments, as well as the organic spend, are all coming together now to offer those solutions out there. And as you rightly point out before, in with that comes a richer data set for us to use. And it's like this sort of flywheel effect. The more people that use more technologies that we offer, the greater and richer the data set we've got. And the more ability that we've got to streamline everything.
Yeah, it's a huge ambition, but it feels very much like it's coming together. But I guess the most important thing that underpins your ability to do that is the strength of the cash flows that are coming from the more established side of the business. Perhaps talk us through, how the business is generating so much cash, the cash you need to fund this growth, and how it's been supported by some of the sort of more long-standing shifts in the business, in particular distribution as a service.
Yeah, definitely. I mean, the stats we put out in the market are absolutely phenomenal. 2/3 of all of our revenues are based on recurring income. It's technically recurring income from subscriptions and from SaaS. What we don't say is that the other third is highly repeatable. It's the same customers buying the same product each year. So it's things like our de facto ratings service. So we have the same manufacturers buying the same service from us each and every year. So if you look at recurring income and repeatable income together, that's almost 100% of what we do. So the visibility of revenue that we get is phenomenal. And the cash flow from that recurring income and also from our annual ratings, which are paid for in advance by the product providers, mean that the cash flows of the business are incredible. So our cash flow conversion each year is really, really strong, and that enables us to look at acquisitions with real confidence. On top of that, we've got a great team in-house to complete multiple acquisitions. And the benefit, I guess, of having two CEOs, some organizations think that might be a downfall. But for us, it works really well. Neil and I have run the business together since 2010. And at times like last year, when we completed 4 acquisitions plus a number of investments, it's really helped to have two of us spearheading those acquisitions. We've got a great team in-house, a CFO that is absolutely phenomenal, and has also recently negotiated a very good RCF facility for us with a 3-bank club up to 80 million. So we've got the finances that we need for the acquisitions. We've got the strength in debt from the team. And as you rightly point out, the cash flows in the business to support the decision making we need and to support the business going forward. So really good combination.
Yeah, absolutely. So 2023, what a year. What can we expect in 2024? How do you follow that sort of year?
Yeah, I think more of the same, I believe. So acquisitions have been a key part of our strategy since 2020, really. We stayed out of the market in 21 and 22 because we thought that asset prices were too high and the market was incredibly competitive. And I think that it's proven the right strategy. Many of the businesses we acquired in 23, we've been speaking to for a long period of time. And it's only recently that we felt that the market is right for us to utilize our capital in the form of acquisitions. And we've still got a pipeline, a healthy pipeline. And I think we'll complete some more acquisitions this year. I think we will continue to make investments into our Matrix 360 products with a launch due later on this year. And then I believe that through Planner and the acquired businesses, we'll be making sure that those connections are deep between those individual systems, so that we're able to offer out to the market this connected platform. We've obviously made an investment into Mortgage Brains. We look forward to rolling that out to intermediaries throughout the year. And I'm very much expecting for us to win 1 or 2 major enterprise deals this year as well. So I think the focus is on connecting the platform, winning the major deals, and then completing the pipeline of acquisitions that we've got in play.
Yeah, well, I'm very much looking forward to hearing some of the news flow that's coming in the year ahead. Matt, thank you for speaking to us again. It's been an absolute pleasure.
John, you're welcome. Thank you very much for having us on Vox. Thank you.
Thank you.